starters, who has a worse forecasting record than Janet Yellen? So I don't put much weight on what she says, but yeah, the recession indicators, the long-term, when I say long-term, I mean the ones that have the best track record of being good predictors as further in advance, have been signaling a recession for a long time. So a lot of economists, and I would include myself, have said, there was going to be a recession in 2023. According to the data, that didn't happen. Maybe we fell into one around November, December. We won't know for another 4 or 5 months. We'll see what happens. But it doesn't mean that the warnings were wrong, and it doesn't mean that we won't have a recession. It just means that it has taken longer to unfold than a lot of people expected. But now those same signs are actually getting worse. I'm sure you've heard, there was some very good analysis from a number of people, Jeff Snyder, Stephanie Pomboy, Sarge, Steve Guilfoyle, New York Stock Exchange, and others, about how that unemployment report, the employment report that came out about a week ago, was completely misread. I mean, that was, the stock market went up,
Right.
Unemployment, job creation exceeded expectations, unemployment remained constant. That was consistent with the happy talk, with the Goldilocks narrative, soft landing narrative, etc. And so kind of stocks rallied on that. But if you look behind the numbers, I mean, there are two surveys. One of them showed about 220,000 jobs created. The other one showed 1.5 million full-time jobs lost. And then there were about 700,000, a little more, part-time jobs created. So if you net the two, you still lost 750,000 full-time jobs. And then, of course, part-time jobs aren't nearly as rewarding as full-time jobs. And then they'll show that, hourly wages went up. Okay, but there were fewer hours worked. That's how employers are managing the costs. Like, I'll pay a little more, but you work 30 hours instead of 40, so you're making less money. So there was, and then they gave a downward revision to the prior months. And for 12 months in a row, 11 out of the 12 months, they have downwardly revised the prior month's number. So why should we have any confidence in the 220? Because that's probably going to get downwardly revised next month. And when you're like 11 out of 12 months, that's not random. Yeah, there's a certain amount of noise in the data. Everybody understands that. But that's something seriously flawed in the model. You don't get that. It's like, rolling the dice, getting a 6 11 times in a row. It doesn't happen, or it's extremely rare. So there's something wrong with the model. So there's a lot. Well, we have so far, but I think our luck has run out, if you want to put it that way. Germany's in recession. They just are. That data is clear, and it's getting worse. Japan is kind of right on the edge, might be in recession. UK, same thing, right on the edge. The U.S. China, saying China's in recession is probably a stretch. But if in China, if the growth goes from 10% to 7% to 5% to 4%, which it has over the last 10 years, that lost output is equivalent to a recession. China's trying to prop up their economy, so their economy is doing very poorly. When I see things like world trade contracting, it's not with the trade figures. Everyone focuses on surplus or deficit. So you have a trade surplus, your GDP goes up. You have a trade deficit, your GDP goes down. Or did the deficit shrink? That makes GDP a little higher, etc. Forget about that. I mean, yeah, okay, it's important data, but if you look at the top line, the exports and the imports, they're both shrinking. So whether the deficit gets a little bigger or a little smaller is less compelling, less important than the fact that both numbers are going down. World trade is shrinking, and that almost never happens except in recessions or during the Great Depression. Well, the Fed, of course, always says we're not political. We do what we're supposed to do. We follow the models. We're not political. That's completely untrue. They're highly political. They watch the headlines very closely. So they're aware of it. And you have to sort of put Jay Powell in context. He is a Republican, but he's a Bush Republican. There's no reason to think he likes Donald Trump or is a Trump supporter, et cetera. He's not a Democrat, but he's the kind of Republican who doesn't really like Donald Trump. So my expectation is, the Fed for now is not going to cut interest rates. They're done raising. That's pretty clear. You'd have to have some kind of inflation shock before they raise rates. That is unlikely to happen. Prices are going down. Well, sorry, the rate of inflation is going down. Prices are still going up. That's a big point of confusion. So prices are going up, but the rate of increase has dropped from 9% to 3% in the past 16 months. So that's progress. 3% is still well above the Fed's target of 2%, but they think they're at what they call the terminal rate. The terminal rate is the rate where it's high enough to bring inflation down without having to raise rates more. In other words, it's high enough to act as a brake. Just give it time, and inflation will come down on its own without further rate hikes. The Fed believes they're in that position. They won't be raising rates. So the question is, when will they cut rates? The answer is when it's too late. Meaning, the Fed are usually the last to know. And the best example I can give you, Danielle, is they pay enormous attention to what we just talked about, the unemployment rate. 3.7%. That's one of the lowest unemployment rates since the 1960s. I mean, it is extremely low. But they believe in this Phillips curve, and the Phillips curve is an inverse relationship between inflation and unemployment. So the view is if unemployment's low, inflation is going to go higher. If unemployment goes up, inflation goes down. So they're seeing unemployment extremely low and saying, well, that's a little bit of a danger in terms of inflation. So we can't cut rates. But in fact, there are a lot of problems with that. First of all, there's no evidence for the Phillips curve. I mean, I can give you, do a quad chart. I can show you high unemployment, high inflation in the late 1970s. I can show you low unemployment, low inflation, in the mid 2010s, and so forth. So you can find every low unemployment and low inflation during the Great Depression. So there is no Phillips curve, or you construct it. The Phillips curve, last time I looked, was a flat line, not much of a curve. So first of all, the Phillips curve is garbage. Secondly, employment is a lagging indicator. I'm not saying it's not an important number, but employers do everything possible to avoid laying people off. When revenues are drying up and margins are going down and profits are going down, they'll turn out the lights. They'll renegotiate the lease. They'll cut the laundry bill. They'll bargain harder with suppliers. They'll do everything they can except fire people, because people are hard to hire. You get the talent, it's hard to find. You train it, the last thing you want to do is fire them. So they will fire them. Unemployment will go up when they get desperate enough, but by then the recession has already started. In other words, it's a lagging indicator that tells you nothing. So my point being, Jay Powell is looking at lagging indicators. If unemployment starts to go up, which I expect it will, he will cut rates, but we will already be in the recession. So he'll have political insurance, because he'll say, well, yeah, we're cutting rates, but hey, we're in a recession, we have to. It'll help him avoid the charge that he's doing it to help Biden. I mean, it's the charge will be made anyway. They'll be in the political crossfire, but the economy would be so bad at that point, no one's going to blame Jay Powell. Well, we both know that people say that almost every election. You could have said it about 2020 and 2016, right, et cetera. So it's a little bit of a cliche, but this time it might be true. And I say that not because of a Biden-Trump horse race in a close election. That may or may not play out. We'll find out. But there's so many things happening right now. I mean, why are we talking about the November 2024 election, and here we are in early 2024? The answer is there are things happening right now. Trump's on trial in 4 different jurisdictions, facing 90+ criminal charges. There's a chance that he'll get convicted of something. I think actually that's a very high likelihood. Some of them will be dismissed. Some of them he'll win, but he'll get convicted of something. Now, he might actually be in jail on election day. So the orange man in the orange jumpsuit. But there's no, and this is something a lot of people don't understand, there is no legal or constitutional prohibition on electing a convicted felon to the presidency. So Trump could get convicted in this Fulton County case, although, as you know, that case is blowing up in the prosecutor's face. As Fani Willis has got her own scandal now. She might be, the case might actually be dismissed. We'll see. Oh, right, they're 2 different things. So what you're talking about there's a name for it. It's called lawfare. Basically, taking the law, I'm a lawyer, practiced for decades, taking the law and weaponizing it and conducting warfare with the law. So that's what lawfare is. And basically going outside the boundaries of precedent, tradition, interpretation, etc., and using it as a weapon. Well, there's no doubt that that's what they've done against Trump. Now take this this Bronx County business case, which is actually a civil case, where he's been accused of overstating the asset value of some properties on a loan application at Deutsche Bank. Well, first of all, Deutsche Bank's a pretty sophisticated bank. I assume they do their own diligence. They have their own appraisers. They made the loan. They got paid back with interest. They made a profit. Nobody lost any money. Show me a real estate developer in New York. Show me one who doesn't fade values depending on the context. I mean, I was tax counsel at Citibank for 10 years. It was the world's largest bank at the time. We had 5 sets of books, completely legitimate, by the way, just to be clear. We had generally accepted accounting principles, international accounting principles, tax books, cash books, and management profit reports, depending on who wanted to see what, which way. So that's, and they accused him of they overstating the value of Mar-a-Lago to secure a loan, his place in Palm Beach. And they said, you overstated it because we have the appraised value for property tax purposes, which was, I think, 15 million. And everyone knows that property tax appraisals tend to be low relative to market valuation. And they got some independent brokers that said, are you kidding? That place is worth 150 million or more. But the judge, who was completely corrupt in my view, said, no, it was 15. You said you used a higher number on your loan application. But here's what they're going for. The judge on day one, on the first day of the trial, he said Trump's guilty. He said, basically gave what's called a motion for summary judgment. The entire trial we've heard about is on damages. It's not whether he lied or not, according to the judge and the prosecutor. It's the damages. So right. First of all, he never really got a trial on the substance of what we're talking about. But their damage theory, the fines will be, so he's kind of already guilty. The fines they're talking about stripping his business license, turning his properties over to a receiver, like a trustee, basically. The receiver would then have the power to do what he or she wants with the properties, including sell them. And you say, well, wouldn't Donald Trump get the proceeds? And say, yeah, but they want to put a $300 million fine on Trump. So the first $300 million of profits would go back to the state of New York in the form of fines. This will destroy his business empire. He spent his life building. I mean, the properties will be gone, the money will be gone, his business license will be suspended. He won't be able to do business in New York. This isn't like a $10 million fine for right. a little typo on a loan application. They're destroying his business. But there isn't a property developer in New York who hasn't done the same thing, but they leave them alone. So this is an abuse of prosecutorial discretion. It's just one case, and we could go through Georgia, Mar-a-Lago, the classified documents case, the January 6th case, the Fulton County's the RICO case, and don't forget about our friend Stormy Daniels, with the hush money. I mean, I was a lawyer for 40 years. We had, every firm I worked for, and it's true of every firm in business, you have your share of complaints of various kinds. You generally tend to, you have a disgruntled employee or whatever. You investigate, they get their lawyer, you sit down, you negotiate it, you give them a settlement check, nobody admits any wrongdoing, and you sign a non-disclosure agreement, and both sides go their way. That's how you settle those things. They're messy to litigate, and you don't want to do that. That's what, is that hush money? I mean, you just settle a case and you give somebody some money and you sign a non-disclosure agreement. Is everyone suddenly guilty of criminal hush money, which is what Alvin Bragg said? And he is kind of, let's face it, he's a lightweight. So they are just, and then we haven't even talked about the 14th Amendment, Section 3, and then, but your point, Danielle, and you're right, there is no end to it. This is, and by the way, quick footnote: every time they bring a new case, a new charge, make things worse, his poll ratings go up, his rankings go up. Let's go back just to the years before the war in Ukraine. So it started at the end of February 2022. Well, for I don't know, 30, 40 years since the end of the Cold War or longer, the Russian central bank had held a portion of their reserves in U.S. Treasury securities, dollar denominated, but U.S. Treasury securities in particular of different maturities, bills, notes, probably some bonds, mostly shorter term bills and notes. To their credit, Vera Nabiullina, who's the head of the central bank of Russia, she, in my view, she's the only central banker in the world who knows what she's doing. She put 25% of Russia's reserves in physical gold, in, held in custody in Russia, in Moscow. So the point being, you can't freeze gold. I've always liked that about gold. It's not digital, it's not electronic. You can't freeze it. You can say what you want, but so that part is off limits. And they had some other types of investments. So a big chunk of it, about $300 billion, which was about half their reserve position. Their reserves were about $600 billion. They had $150 billion in gold. Was in U.S. Treasuries. Now, the last paper Treasury security was issued like in 1979. They're all digital. They're all, I call the dollar the original cryptocurrency. But they're held in custody, mostly in Belgium, but other European banks as well, other custodians, Deutsche Bank, UBS, and some in the United States, but mostly in Europe. Now, on day one of the war, or within a matter of days, those treasuries were frozen. But let's define what frozen means. Frozen means you, Russia, you still own them, but you can't have them, you can't collect the interest, you can't sell them, you can't trade them. They're yours, but we're locking them up, and the U.S. Treasury and the Fed control the ledger, so they can enforce that. They can make sure that those securities cannot be transferred. That's freezing. Now what they're talking about, and they're talking about doing this by February 24th, which happens to be the second anniversary of the start of the war. I don't know why they have to pick anniversary dates, but that's what they're talking about. They're talking about seizing. Seizing is different. That's when you steal them. That's when you take them and say, hey, Russia, pardon me, these are not just frozen, they're ours. We're taking them. They're not yours anymore. And selling them at the market and using the $300 billion of proceeds to finance the war in Ukraine. Not only are we taking your money, but we're using it to finance your adversary in a war. Now, a little background, Biden and the White House want $61 billion of additional money for Ukraine. That has not passed. There's a lot of opposition in the House. Some opposition in the Senate. I would say if it were up to the Senate, it would pass. But the House is saying no. They and what Biden did, what the White House did, they bundled $10 billion for Israel, $60 billion for Ukraine, some number, I think another $10 billion or so for maybe a little more for Taiwan, in one bill. And the idea was, even if you don't like Ukraine, you don't want to vote against Israel. So it would be a way to get everybody to vote for it. Well, the House said no. And Mike Johnson, Speaker of the House, said no. And they said, first of all, we want them separated. So the House voted for Israeli aid. That already passed. It's with the Senate. But they have not voted on Ukraine. And then they said, well, if you insist on doing that, we want money for the border. And Biden said, okay, I'll take more money for the border. And by the way, we'll use it to process more illegal aliens. And they said, no, you can't use it for that. We want you to shut the border. So this is at an impasse right now. They might shut down the government over this in the coming days. But the point is, there's no money for Ukraine. As of now, there is no money for Ukraine. The European Union separately has not approved any new money for Ukraine because Hungary is exercising a veto power over that because the EU requires a unanimous vote. So Ukraine's not getting any new money from anywhere right now, and they're losing the war pretty badly. So the question is, so where do you get the money? Well, maybe they can figure this out, but all of a sudden, Johnson and the White House, Mike Johnson, the White House, say, hey, we got $300 billion sitting right here in the banks. Let's just take it and spend it on Ukraine. If you do that,
yes,
you will destroy the U.S. Treasury market. That is there's a lot of weight to the BRICS. And by the way, as far as that Bloomberg article is concerned, um, the facts that the reporter was reciting were correct, but they're also irrelevant. And here's why.
Yeah.
The BRICS is not a political union. It is an economic union with a focus on trade and currency. Yeah, China and India, they fought in the Himalayas. Saudi Arabia and Iran are both members. They've had their differences, et cetera. So to say there are all these political differences among the members, and it's not a perfect, marriage or whatever. Yeah, but that's not the point. The point is they're working on a currency union and a free trade area. And you can have that. India and China can fight over the Himalayas all they want, but if they reduce tariffs and have a common currency, that's a big deal. And as far as they've been talking about this a long time, they haven't made much progress. That's not true. They've made a lot of progress. They have the New Development Bank, which is basically a clone of the World Bank. They have the Contingent Reserve Arrangement, which is basically a clone of the IMF. They spent a lot of the last 10 years duplicating the Bretton Woods institutions under their own control and for their own purposes. So they've sort of cloned Bretton Woods in a way they control. They're building their own communications networks. And here's the big thing that, they had the Artist Leaders Summit where, Prime Minister Modi and President Xi Jinping and Cyril Ramaphosa and the other leaders were there. Putin had to come in by video because there's a warrant out for his arrest from the International Criminal Court. But I was one of the ones writing and talking about how it would be highly significant in terms of advancing the currency. The new BRICS currency is what we're talking about. Gold linked, by the way. Then it sort of came in when people said, "Hey Jim, nothing happened. Like you were talking about this, and what was the big deal?" Well, there was a very big deal, which was adding the new members, because there's no point. What's the benefit of a bilateral trading currency if it's India and China, and they agree on it's easy to invent a currency. Just pick a name and print some, and there you go. So, but if India and China had a common currency, and India shipped goods to China and got paid in that currency, what can India do with the currency? All you can do is buy stuff from China. You might need some stuff from China, but you want to go shopping everywhere else in the world. Same thing with Russia and India. But so how do you make a currency union work? Well, the answer is you expand the membership so that when you receive the currency for your exports, you can spend it somewhere else. That's what the euro is. And the euro has 16 members. 19 members today. So the key to a successful currency union, you don't need a common fiscal policy. I mean, does anyone think Germany and Greece have the same fiscal policies?